Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody is doing well. Okay, I want to get started. Obviously, interesting sessions over the last couple of days here. We have essentially been kind of hanging out right near the June lows in the S&P. That's in the S&P. So we did breach those earlier today by just a little bit, by a smidgen, and then kind of just hovered around. Hey, how you doing, Ryan? Yeah. So you know what is really fascinating? Actually, a couple things I want to cover. So you know, the Nasdaq has been actually acting better in the last couple of days. If you notice the Nasdaq, if you pull up your Nasdaq futures chart, what you will notice is that we have, in fact, not only have not broken the June lows, but we haven't even taken out the lows on Friday in the Nasdaq. And you know, if you look back here at my screen, I have a bunch of stocks here. Looking at these are all stocks we're trying to get long, by the way. On Semi was up $1.50 today. FCX was up 39 cents. AMD was up 87 cents. So yeah, just really interesting. Some of these tech stocks are holding up much better. Whether again that means anything, or whether we continue to follow through on the downside, that's obviously still remains to be seen. But the other thing is the VIX briefly, I mean, it didn't quite get up to 35. I've been talking about that, been writing about that. The VIX did briefly, jump up into the mid 30s. I think the high on the VIX, in fact, let me pull it up here. The high today on the VIX was 34.18, I believe, right? So yeah, it's so we're getting close to those we're getting close to those 35 to 40 range, which is typically where you get yeah, that's typically where you're going to get a major, at least some kind of a rally, some kind of a pause, right? So all in all, everybody in their, everybody is going, again, is under the assumption that we're going to break the June lows on the S&P, which we did. But interestingly, again, we're not getting a ton of follow through. And so that is really, I'm still kind of looking for that that final capitulatory kind of swoosh down, which we still haven't seen. Maybe that's coming up in the next, by the end of the week. Yep. Jim, it's not really, well, if you want a number, it's between 35 and 40. And it really is like a spike. And usually that comes with a, kind of a final kind of give up where, you're going to open down, 50, 60, 80, 100 points on the S&P. And you'll see that big kind of, what I call the swoosh, that give up. Everybody kind of just gives up on the market finally. And then you get that spike up into the 35, 40. Yep. Yeah, I agree, JT. I wrote about that this weekend. And by the way, what caused that last spike in the, if you guys haven't figured that out, and in fact, the distribution level I gave you guys on the newsletter this weekend, I don't know if you guys read it, was that weekly level at 114.72. And I honestly did not expect we were going to get there in like a day. But what happened is the British pound, right? You guys saw what happened to the British pound. I guess they were gonna, yeah, the British pound is what caused the dollar to spike like that. As you know, it hit an all-time low at what is it, 104, whatever it was, on the British pound. It's like 10, yeah, 104. Yeah. So, but we've seen a reversal, and it is getting frothy. However, again, as I tell my members, the dollar is not going to back off. And here's the other problem: is bonds. Bonds are also looking like they're getting. The last couple of days in the bond market almost look like a panicky kind of crash type scenario. If you guys pull up your bond chart, now here's since we're going into bonds here, I did mention to our members, and check it out, the 30-year. Go to a weekly chart, and you'll see 124.19, right? 124.19. It's actually a monthly. It's a huge level. It's probably not tradable. 124.19 to about 122 on a monthly chart in the 30-year. That's a monthly accumulation level. We are long TLT. We're upside down on it a little bit. We got long at 103 and change, we're a little bit upside down on that. But the bond market looks like it's broken. And that's part of the problem right now is if you look at that last, so Jim, if you're looking for a capitulation type low, look at the 30-year in the last 3-4 days. That to me looks like, we're getting really close to, some type of a high, kind of peak in yields, in my estimation, coming up. One of the things I would note also is the 2-year is really what I've been focused on lately, because the 2-year, obviously shorter term, is sitting right around 420. And look at the chart on that; it's been holding right around that 102.12. If you haven't looked at the 2-year, that's the ZT/ZT on your Thinkorswim. I don't know what it is on the trade station. I don't use that anymore. So, okay. But in a nutshell, here's what's going on. The market will not bottom. Would not get which I think it's all kind of climaxing right now. With the VIX, bonds almost crashing, the dollar extended. I think we're coming into, again, and remember October, we're still not done with October. So there still could be, a little bit more downside, but it is showing some resiliency right now. So it's going to be interesting. In fact, all these stocks that I'm trying to get long, a little bit lower, we're all up today. We still can't get filled. So go figure, right? We got 3-4 stocks that we're trying to get filled on, and we can't get filled. In other words, they're not falling hard enough. In fact, all of them were up today, which is a little bit frustrating. But I think we're gonna stay really patient and wait until they come to us. We're not gonna kind of get emotional and jump in front of them. So we'll see what happens there. Okay. So now on the S&P. I'm going to do a session tomorrow, not tomorrow, but Thursday, by the way, on profit margin. So if you guys want to join me for that, also, sign up for the newsletter. And I did have a few of you coming in for our free 5-day. I'm having a few of you. In fact, we had a pretty nice attendance today in our M3 session. So if you're interested in that, make sure and sign up for that. Now, looking at a longer term chart on the S&P, if we fall further and get that kind of, again, capitulatory type low, I think 3,600 is probably where we we're about 60 points away at the moment. If you go back and look at your weekly chart on that, you can see there's a bunch of, it's not really an actual level I would trade, but it's kind of a support area from back in July of 2020. Just check it out. So I think, and again, it's 3,600. So that's where I would be. And on a trading basis, if I was trading futures, what I would do is look for levels to form, because because we don't actually have a level per se, an accumulation level of high quality accumulation, just a bunch of pivots and so forth. So I would probably wait for a level to form and have that big reversal, which, I mean, who knows if that's actually going to happen. We just never know. Last in June, if you recall, mid-June, when I was kind of pounding the table on the bearish sentiment and the same kind of stuff that we are kind of what's happening right now, we didn't have that. We hit 35 on the VIX a couple of times. We kind of just meandered, went sideways, and then the market just took off. So, the market never, does what you expect it to do most of the time, especially when everybody's expecting a particular scenario. So, I mean, we'll see. We are obviously, I would say we're closer to a low than we are to a high. That, again, I am actually long a volatility SPY right now. I think I mentioned that on Friday. So, in fact, I am short some, long some puts on the S&P. But, it's interesting because I just got off with my members. And if you are long puts right now, you're not making any money, because we are long some puts right now. And if you are long puts, you're probably a little frustrated because you're not making a whole lot of money. So that kind of says something also, right? Oil. Let's get into energy. So oil, we did get long. I think I mentioned we covered our XLE puts, but I did initiate a new long position or call position in XLE. Because if you looked at oil today, oil did pop, and the oil sector has been beaten down. And I think, when we do get that recovery, I want to be long oil stocks. XLE is a great proxy for oil. That is starting to, come into some really nice levels as well. And so we did take on a long TTS. We did take on an XLE long call position as well there. Nat gas, I don't know if you guys heard, there was a situation in Europe. That is an ongoing problem that is probably still going to cause, energies. So it's kind of a disconnect right now. I think I've talked about this, where the fundamentals on the energy sectors, particularly in oil, are still very bullish, right? You still have supply constraints, close to that now with oil kind of coming off. Okay. All right. So oil, by the way, also hit a nice accumulation level. And that's the reason why I went back into the XLE at 76.50, 74. So I think I mentioned that level the other day as well. So if you look at your charts, we did bounce pretty nicely, about a couple of bucks off that. If you want to short oil, around 80, 81 would be a level I would be looking at on the future side to be shorting oil. Okay. And then nat gas, it came off pretty good. And it looks like nat gas probably goes lower as well. Two different looking, the energies and everything are getting hit now because of the recession fears. So demand destruction and all that's hitting all the energies, and coupled with the surge in the dollar. So that's if you're looking at all the commodities, gold, silver, oil, the metals, copper, even the grain markets, notice how weak they've been over the last couple 2-3 days. And I would attribute that to the surging dollar. So that is spilling over into all of the commodities. And again, until we get relief from that dollar coming off, I think, all the metals and stuff, that's why I kind of been backing off on I still like silver, but at lower prices. And gold looks interesting to me at 1,600. But until we get there, I'm just not really that interested in putting on any gold. Watch gold. Again, it's getting close to that 1,600 level. It's 1,635. I'm kind of warming up a little bit to gold near that 1,600 level. And I think I mentioned we've been in some nice trades in silver, but again, as the dollar is spiking, still not really that hot on silver until we get down into the $18 level on silver. Okay. So starting to get interesting, but again, all predicated on the dollar. And what's going to cause the dollar to fall off is stocks have to get their footing and recover, and interest rates and the bond market too, because the bond market is just just getting destroyed right now. Which I would bet. Again, look at the. It seemed to me like we are basically wholesale selling in the bond market, especially on the long end. I mean, all you got to do is look at that 30-year chart for the last couple of weeks, and you can see that's kind of stuff we want to look for in the stock market, which we're not getting. But maybe it's going to come in the form of bonds, right? So it's going to be interesting. In fact, the bonds are getting a nice pop in the after hours. The TLT just jumped about 20, 30 cents in the after hour. So we'll see what happens there. And we are long TLT. We're underwater on that a little bit. So to review the positions that we're in right now, we just got long XLE, as I mentioned, calls. We're long the TLT. We are also in the volatility SPY. Basically, I'm looking for an expansion in volatility, which is not coming right now, which hopefully we get that by the end of the week. And I am looking at a bunch of stocks right now to get long. As I mentioned, all of them were up today, unfortunately, but we'll see what happens there. And then looking at on the grain markets, not really anything. Wheat is the one I'm really focused on primarily because it's had such huge moves. I think I've mentioned this. It keeps pushing up around the 920, and then kind of it's in no man's land right now. If it pushes down into the low eights, I'm going to be looking to. I think I mentioned I closed the WEAT calls on Friday as well, which was a good move because wheat's just kind of been bouncing around. So grains are interesting. And in particular, wheat down in the low eights, and soybeans probably looks like they want to break 14, probably down in the 1350 area on soybeans. Okay. But you can see soybeans have just been chopping around. And again, it has to do with the dollar pressuring a lot of the commodities right now. So, and then in the currency markets, again, haven't really been looking at the currencies because of the dollar. We need to see the dollar kind of back off. The one currency that there's actually a couple of currencies that you might want to look at. Look at Canadian. That's coming into some weekly accumulation. Also, Australia is actually Swissy coming into some really interesting levels. So those are the two currencies that I'm kind of focused on. The yen, again, even though they intervene, there's just nothing there on the yen. I think it's going to break to new lows. So is the British pound, euro. We know about that. So the only two currencies I'm really looking at are the Canadian dollar and the Swissy. Also, Mexican peso. I don't know if you guys ever trade that, but that's a pretty neat little market. $5 a tick. Around the 48 looks pretty interesting. That also looks interesting if you guys are interested in trading the peso. That hasn't really been, it's been under pressure because of the dollar, but it's been holding up fairly well. kind of in a range. But in any event, those are the two currencies I'd be looking at right now. Do you guys have any questions so far? I think I covered pretty much everything. I think going into the end of the week and end of the month, you're going to have a lot of positioning, still tons of bearishness out there. And it is frustrating a little bit because, I would rather see this thing just flush out, just get that final kind of capitulatory low. And as you've been watching in the last couple of days, yep. Ryan, I would be looking at both depending on your particular situation. Yeah. By the way, are you going to be in my class tomorrow, Ryan? I know we've been back and forth. So, anyways, yeah, it depends on your risk temperament, Ryan. If you want to take on more risk, obviously with a lot more reward, you probably do want to do it with futures. But if you want to take a lot less risk. Okay, great. Awesome, Ryan. See, you got the coupon, right? Okay, good. Because I know we kind of missed getting that to you in the last couple of weeks, but I look forward to seeing you on board. Yep. All right, great. Thank you, Ryan. Okay. Yeah, we'll go over that. I can go over that with you specifically one-on-one if we want to get on a Zoom call or something. Okay. Kind of set that up. Okay. All right. Yeah, I know, Ryan. Yeah, I know you told me when we talked. Hopefully everything worked out for you, right? On the real estate thing. Okay, so I think we're going to wrap it up early because I don't, again, right now, what I'm suggesting to everybody is, can you still short this market? Clearly, the market is still, moving lower, but at a much slower pace, right? So the rate of change now on the downside is slowing down. Now, could we come in tomorrow? Which, in fact, I want. Again, what I want doesn't matter, right? Could we just kind of bottom falls out of this thing at some point? I mean, could we just be the pause before the final kind of washout? That's interesting because we just never Yep, exactly, JT. Yeah, that's the thing. I mean, and I also mentioned in the in my daily market overview a couple of days ago, there could be some systemic risk if look at look at these moves in the currencies. I mean, the British pound moved. I mean, those are some crazy moves. I mean, that's like that's like a banana republic currency, right? To have those kind of moves on the British pound is craziness. So that's going to really, if we keep getting this kind of volatility along all the currency markets. Ryan, no, actually, that's an actual. I think it's an all-time low, right? Yeah, yeah. Yeah, Robert. Well, again, if you're not going outside of Britain, it's fine. It's the it's people that are doing business in Britain getting paid in British pound. Let's say the U.S. companies getting paid in British pounds in UK, and then having to expatriate that money into the U.S. You're getting killed, right? So, yeah, Jim, actually, I'm going to do a session with my members tomorrow. We're going to go over all the long-term stuff. I have a bunch of members that are positioning for some ETFs, some SPY, some Qs, a bunch of stocks. Yep. In fact, I got 5 stocks on my screen back here that were all up today, which we're trying to get long. That's exactly right, JT. Yep, 113. Yeah, because that's the pivot low. Were you in the session this morning, JT? Because I mentioned it this morning in my market overview. Yeah, the 113 really is where we need to break, right? You can clearly see, look at your charts on that, and you can see 113 is kind of that little pivot low. If we break through that, I think we get a nice, I would, look at a 110 would be your first accumulation level pullback. By the way, if we do move down to 110 from 114, we're going to have some really nice moves in the currencies and gold and such, right? So, the exciting thing for me and for all our members, and if you understand how the markets work, is there are a lot of things coming together right now, right? We're kind of in that perfect storm, right, everybody? Right? You've got, the stocks kind of almost at a culmination point, right? VIX up in the 30s, dollar surging, bonds crashing. All this stuff is kind of that perfect storm, kind of that brew. But so this is exciting if you know what you're doing, right? I think we're getting to that stage right now where things are going to get really interesting. Yep. Exactly, JT. That's exactly what you got it, my friend. You know it, man. You should be excited. If you're fearful of these markets, you gotta check what you're doing, because this is the kind of situation that you should be salivating for, but you got to understand what you're doing, because again, there's always two sides. There's the people that don't know what they're doing are going to get destroyed, and people that understand how the markets work. This kind of situation is actually going to produce some really tremendous opportunities, but again, you got to know what the heck is going on, right? Does that make sense, everybody? So you should get really excited, but if you're fearful, then you probably need to figure out, what you're doing. Okay. All right, everybody. Hey, great seeing everybody. Ryan, I look forward to working with you soon here. JT, great to see you, my friend. Everybody, I'll see you guys on Friday. Take care. Be careful out there. Again, if you don't understand what you're doing, stay out, because I think we're getting to some really nice situations coming in here. Okay. And in any event, have a great rest of your week, and I'll see you guys on Friday. Take care, everybody. See you soon.